I'm Nick Hughes, and this is Founders Live Conversations.
Let's just jump right in. Tell us a little bit more about yourself and your background, how you got here.
Yeah, so five-time founder, started five, sold three, closed two. One was kind of an epic crater in the 2008 downturn. So first one, I started a company in 98. I sold in 2002. So context there is we went through a thing called a tech bubble. And then right after that, we went through 9/11. So to have a company that survived both of those it was not 2002 wasn't a great time to sell a company, but I was able to get it sold and across the line. So since then, been with a couple of venture capital firms, one corporate venture capital fund, one small venture capital fund based here in the Northwest, and have done 9 transactions. So, 7 on the sell side and 2 on the buy side. So bought 2 companies, sold 7 companies as an operator or board member. And then now doing most of my paid work comes from helping companies get ready for exit and get ready for sale. And I'm writing a book that we've just rebranded from 6 Month Startup to Get Trajectory. So I've been working with an editor to finish that and I'm trying to get it out by the end of the month so I can hand it over to the publisher. So that's kind of exciting, mostly so I can stop thinking about that chapter and work on the next chapter.
Nice. One thing I want to ask before we really get into the meat of what we're talking about today is, you've had a number of experiences or sprints, if you will, in your career. How have they changed? So go back to like your first real startup of your entrepreneurial journey, and then maybe compare that to like the last and or the current. How have those experiences changed, given the nature of the world and maybe technology? It is easier to get going in a startup today. It's probably harder to scale or get discovered on the massive level because there's so much noise. So tell us a little bit about that.
Yeah, first one was a B2B software company that we were basically a first online software distributor, which sounds kind of silly now, but at the time, Microsoft had all physical product distribution companies with folks like Ingram and Tech Data. Those were 12 and $16 billion companies at the time. And we went from 0 to 42 million in sales in 5 years. And so as a first-time founder, pretty much made all the mistakes you can make, right? I mean, when I look back at that business now too, Nick, I look at it and go, well, I would not start that business today. Knowing what I know just about startups in general, did I learn a lot? Oh, sure. Yeah, I think you always learn a lot, but you end up learning more through failures than successes.
Yeah.
And even though the company sold, it was a brutal, tough slog after both the tech bubble and 9/11. So we got it sold. It was just a really hard way to make a living. And I think that's that critical eye now. I look at stuff and go, hey, I can make up for money I've lost, but I can't make up for time that I've lost. So by comparison, we raised a huge amount of dollars. So we had to have a data center at a company called Exodus that has since gone bankrupt. And now data centers are huge, right? And then we had a sandbox data center of machines that we had in our office with a raised floor and air conditioning. And now you're like, I could do all of that infrastructure we spent probably $4 or $5 million on for probably $10,000 a month on Amazon.
Right.
So, the idea that there's so much more efficiency today with AWS and other tools, and there's so many more tools available, you don't have to go do it all. But yeah, we learned a lot through those experiences, and you kind of put them all away and now I want to be super efficient in my capital spend. And when I look at investments, I look at like, hey, how can you de-risk this as a founder versus just having passion? Like passion's super important. It's just not sufficient. You need more than just.
Yeah, you do. Well, let's kind of go into, I think that might be we're going to weave not only the current situation and things that entrepreneurs and startups are experiencing right now with the downturn, with some of the things and projects that you have going. So tell us about 6 Month Startup and, really why you building it and why is it important at this stage for the earliest stage entrepreneurs?
Yeah, so we just rebranded it from 6 Month Startup. One of the things I realized in the brand was when we originally launched it, so I used to work for Startup Weekend. and spent about 3 years helping to scale that organization globally. And we ended up in to 1,250 events worldwide in our last full year before we sold it to Techstars, in 120 countries and 74,000 attendees. So it was kind of a crazy sort of event to join a movement in progress. And the biggest gap out of that is founders would come out of a startup weekend or an Inspire sort of event, and they'd be like, woohoo, I'm leaving my day job. And I'm like, yeah, not yet. Like, here's some things you would want to know before you leave your day job. So silly things like, how do I make money? And, what are the options for making money? And is there more than one option? And how do I de-risk it as an investment? So I'm not just chasing passion. I'm also chasing kind of an intelligent form of passion. Passion is important. That drive is important. You can't do a startup without it. At the same time, it's just not enough to, take a second mortgage on your house and not know the answers to some intelligent questions. So what we did was we ran it as a 6-month program here in Seattle. We just finished our 4th cohort here in Seattle. But then I got requests to come to Kansas City and run it over 4 Saturdays over 4 months. And I ran it as a boot camp in the Middle East, in Cairo, and had an interesting time in Beirut, right about the time that the civil unrest broke out in October. And so I realized I kind of had a brand problem. So we've rebranded it as Trajectory Series and gettrajectory.com. But for founders, it's really designed as a program to walk them through, here's 6 months of milestones to get you ready to come pitch your 99-second event at Founders Live, right? So how do I have data behind my market size? How do I have data behind my product roadmap? How do I have a plan to do that? How do I go through like awkward co-founder discussions, right? About who gets what equity and why. So basically over that 6-month journey, we walk them through each of those, and every month there's a set of deliverables. And every month as a founder, you make the decision of go, no go. Like, am I coming back next month? And we see fairly significant drop off intentionally at the end of month 4. And it's really what I would call founder development, not customer development or company building. It's really about you as the founder and how you think about the idea versus, oh, let's talk about how do we get you ready for fundraising. We still have to get you ready to pitch, because if you don't have a decent pitch, people don't understand what you do. But it's less about, if you think of the continuum, at one end I have startup weekend type events, and at the other end I have Techstars as an accelerator. This is really more down here towards founder development around how do I help you think about your idea differently, so that in month 4 you may pivot your idea, but you still have tools for how you think about it from a framework perspective. So that's really what the book and the program is all about.
Got it. Yeah, that's awesome. I like the rebrand, and I'm a huge, a huge fan of I'm a huge fan of, because Dave, you have watched Founders Live totally change from Feature Friday. And, Feature Friday, for everyone that doesn't know, we actually launched in Seattle in 2014 as Feature Friday. And it was a monthly event. It was, a social gathering and a fun pitch competition. And I realized pretty quickly that there was a branding problem if we were going to expand around the world. And so, we had to come up with the ingenious name Founders Live. And you're doing the same thing. So walk us through where you see this trajectory series and really just the whole brand going as you continue to build it out with the book and all that stuff.
Yeah, so the first one is really focused on still a 6-month type program. It's really, again, founder development is stage 1, and book 1 is so Trajectory Startups is book 1. And it's really ideation to product market fit. If you think about the sprint as a founder from how do I think about a good idea, right? So one of the first time we ran it as a cohort 3 years ago, somebody came up to me afterwards and said, hey, I want to be a founder, but I don't have an idea. And I'm like, oh my God, never been my problem. Like, I have too many ideas. If anything, sorting through the ideas of which one I get excited about is the problem.
Well, so can I stop you right there and say, when someone, oh, that's so good. When someone says, I want to be an entrepreneur, but they actually don't have the idea and or the problem they want to solve, what's your initial response is what?
Yeah, well, the initial response was, that's a really interesting question. And I need to give you a more thoughtful answer than off the top of my head, which ended up turning into a chapter in the book. And then the part of the first session is on ideation, like what makes a good idea. and what makes a big idea, and how do other founders think about ideas, especially franchise founders, right? So how does Rich Barton, who started Zillow or Expedia, think about ideas? Or how do people think about problem solution ideas, right? But what if you're B2C and not B2B? And what if you do games like Candy Crush? There's no problem there unless you call boredom a problem, right? So there's no easy heuristic. So I go through a number of scenarios and say, here's what a big idea, here's what's a small idea, so the idea of what makes a good idea has to do with you, founder market fit. Like, are you the right founder to do this idea? And your passion, because you're gonna be doing it a long time, but also it could be a problem or it might be fun. And how do you think about ideas in general, and how do you gauge them appropriately? And then how do you validate them with customer development to really come back and say, was that a really good idea or not? Like, and the challenge for us as founders is we fall in love with our ideas, right? I've loved every idea I've ever had. Some of them were worth my time and some of them weren't. But if it's the only idea I have, then I tend to hang on to it too tightly, and I don't want people to tell me it's ugly, right? And the challenge there is, like, sometimes I'm not a fan of Silicon Valley's perspective of fail fast, right? So for me, I came from a community raised by a single mom who was on food stamps. So I grew up in a community that failure was not an option. Like, that was not, I didn't have a rich uncle or a rich grandfather I could come back and be like, hey, I think I should start this company and you should fund it. So when you come from a community that failure is not an option, then you have to kill bad ideas fast rather than fail fast, because failing fast is like super expensive, right? And leads to personal bankruptcy and lost relationships and just all kinds of craziness. And so you don't want to fail fast. You want to kill bad ideas fast. So how you think about ideas, how you frame ideas, and then how you pitch ideas becomes a really big question of, like, how do I do this systematically? So that was the big gap that I saw in the market. And it really is not about company building, right? So there's a program here in Seattle that you would know, and they're like, how to get funded. I'm like, that's not really the first session. Like, the first session is like, is this idea fundable? And is it worth your time as a founder to pursue it? But because they lead with, hey, how to get funding? And everybody's like, I want funding. It's like, yeah, but they never address, and like, this is a five week or 5 session series. And they never address, like, is your problem actually fundable? Like, is your market actually fundable? And it's so frustrating to me as a founder, because I'm like, you're giving people a false sense of hope without really answering their question. I'm like, I don't want to be pedantic about it. I don't need to say, hey, Nick, that's a stupid idea, right? But I am going to push you to go do customer interviews and ask the question, like, would you buy this if I made it? And, oh, by the way, if this was to fail, why would it fail? Like, I want to know in like 6 hours, but not 6 months. Like, if it's a dumb idea and people are like, oh, no, everybody who's ever tried that has failed. Like, you're whistling in a graveyard. I want to know. And I don't want to wait 6 months or 3 years. And I think that's part of the thing that clearly influenced me. And I had one of my employees in my first startup came to me some years later for coffee, and we finished the meeting. And I'm like, hey, dude, listen, I still don't understand what you do. Not that I'm the final decision maker, right, in anybody's idea. But I'm like, so don't leave Microsoft yet and think about doing these things. He's like, oh, I've already left. And I took out a second mortgage on my house. And I'm like, ah. And I'm like, I'm not the final judge and jury on your idea. That's not the point. The point is what can you de-risk in the process that increases your odds of success? And if you can increase the odds of success, do that as fast as you can. And, Jim Collins wrote a great book called Good to Great. And one of the things he talks about is the flywheel effect. And the question is, like, can I, like, from a standing start to move a flywheel is super hard. But once I have momentum, right, and the flywheel is moving, then I have these proof points, right? And I have things like, I'm shipping the right thing. Oh, the customers care. Oh, they want to pay for it. So using that flywheel effect as part of your judge, I think, is really an important factor. And if you come away from every meeting with every customer and they're like, I like you, Nick, but I don't understand what you do. That's a problem. Like, you got to address that problem first.
Very good. I want to shift a little bit to what's going on currently. It's worrisome. It's exciting. It's crazy. It's kind of all the above. You've been through you've been through a
few of
number of
them.
downturns, so there you go, everyone. But you've been through a few. You've been through a few. So how's this different? And what are we looking at right now in terms of the current? Let's call it early stage. We're looking at
Yeah.
early stage, seed to Series A. What are your thoughts on not only the general COVID situation, and then we'll dive into how it's affecting early stage entrepreneurship?
Yeah, I think if you're, if you haven't left your day job yet, obviously work that as long as you can and build as much personal runway as you can, because I think that's going to be the big challenge. And from the early stage companies, I did for a bunch of our portfolio companies, I did a session, and I did one for a group in Cairo, and I'm like, just get as much runway as you can, right? So you need 12 months of runway, maybe more. And I don't think that's changed, right? So if you have a team and you haven't made those hard decisions yet, I did a blog post recently on how do you make those decisions, and it was the Bain framework for dealing with crisis management, and I used the example of one of the companies I'm on the board of, and because they did it really well, right? How they preserved the team and how they communicated it were all really good. But I think it's I'm a founder, like I'm perpetually optimistic, right? And so in every challenge I see opportunity, and at the same time, hindsight's going to be 2020, and the food fight around that will happen sometime later, but I won't be involved with it, because the answer is you have to make the best decision you can with the data that's in front of you at the time, right? So I think for you as a founder right now, the question is, you really have to focus on, I have limited time and resources and people and cash. So where do I go prove out those things, and how do I create the quickest set of opportunities for me to get to cash the fastest, even though that may be doing services work now and not shipping the product yet, right? So those are fine. Do services is a way to get cost recovery. It may ultimately not get you to where you want to go, but right now the number one thing is survive, because if you survive to fight another day, then you can pivot and make those changes. But don't naively go on with plans as usual, because the world has changed for sure. I used to be with a family office fund that we used to invest in. The family office, so it's a single limited partner versus a venture fund where I have multiple limited partners. And he's decided he's going to take a break from venture investing, which is kind of what he had decided before, but this has just pushed him over the edge and said, there may be great investments in six months or 3 years, but I'm not going to invest anything right now. And the answer is totally makes sense. It's when you have one limited partner, you're kind of at the whim of that limited partner, versus if you raise a fund and you have 50 LPs, you're investing on a thesis, right? So there's still capital out there. So I would encourage you to be focused on, there's still capital, there's still, powder sitting on the sidelines waiting to invest. Your valuation is going to be whacked, right? If you raised money in the seed one and you're thinking about a seed two, how's it going to impact your valuation? The answer is it will. I mean, at very least, it will in the negotiations. And frankly, a flat valuation at this point, again, survival being the number one issue. So having been through the 2008 one and the 9/11 and all those, so this one, I think in some ways it's very bipolar, right? So where the tech bubble just affected tech but didn't affect the Main Street, where this one has really affected Main Street, but tech seems to be, if you look at the market comps on public companies and the number of M&As that are still happening, there's still lots of cash there and things are kind of moving well, but you have to get clear on focusing your message. So if your original message was cost savings, you better quantify the cost savings, because companies are looking for cost savings. If your original thesis was we can help you make money, great, but don't be both, right? Because you're fundamentally calling on different. Your VP of marketing may have dollars to spend, but the VP of HR may not have dollars to spend. So you need to focus your message, and it can't be super general. It has to be very specific at this point to get through the noise. And people looking at their Robinhood account or the Fidelity account on a daily basis going, what the hell's happening? So I think this one's different. I think it's definitely tragic for Main Street. We're going to see a ton of bankruptcies there, and we've only started to see that. Within tech, I think there's interesting opportunities, but your solution really needs to be 10x better than their alternatives, because if it's not, it's going to land in the dust heap, right? There's going to be a bunch of ideas right now that are companies that aren't going to make it through. But as a founder, I don't know how you are, but as a founder, for me, once I sold a company or closed a company, I never went back into that market space again, because I was like, oh, I know all the downsides of that business, right? So I think there's going to be a lot of good ideas that just fizzle. There's a lot that have already closed under the cloud of COVID, right? I mean, there's a company here locally that we had talked to that were like, hey, we need help selling the company, and your runway was too short. And then COVID happened. They're like, yeah, we closed because of COVID. And I'm like, COVID's a cover, right? And that's okay, right?
Yeah.
No harm there.
Yeah, this is so interesting. On the topic of good to great, Darian has a question. Good to great is a good, great book, great read. Do you have any recommendation reads on maybe this specific topic in line with the title of this session, future of startups? So, take that as the direction you wish, but any other recommendations of good reads for current times?
Yeah, I will. I'll pull up a list here and I'll share it with you, Nick, because I just somebody in I do a program in Bahrain, and they just sent me a list and said, hey, we're kind of in between programs and we can't get out of the house. Do you have a list of books I should read? And I'm like, that's a great question. So I'll actually send you a list of kind of my top 10. And I'll put it here in the I'll put it here in the chat channel for everybody. So I'm kind of discount appropriately. I was on a string of a few years that I read 100 books a year. So I'm an avid student and I'm perpetually curious. So I would say the goods and bads of that are just know that I churn through a bunch of stuff, and you may be like, that was super obscure, but sometimes that's true. It is kind of obscure.
I recently watched the documentary Inside Bill Gates' Brain.
Oh yeah,
and yeah, that was really interesting, and so many things I pulled from that, but pretty fascinating just how quickly he drives through books, and the amount of books he reads every year is intense. He's just he's just eating up words, just.
Yeah, for sure. So the list I just posted it there. I need to update it. I also do Goodreads. So if you want to see my 5-star list, go to Goodreads and look and follow me there. So yeah, though my reading has taken a hit because I'm not driving or on a plane, so I'm not listening to Audible books, which is probably, it definitely has had a lull. But some of my favorites are there. So 0 to 1, I enjoyed Peter Thiel's book. The Hard Thing About Hard Things, I think, is particularly good now, particularly relevant again. Bad Blood, if you want to read a book that reads like a novel, but was actual real life, that one was brilliantly written. Mindset, I think, is terrific. Carol Dweck's book and Grit for Angela Duckworth both represent good timing. And then if you want to do a book on negotiations, Never Split the Difference, Christopher Voss's book was awesome. He's an FBI negotiator.
I'm reading that right now, actually.
Love it.
Yeah.
Love it. It was great. Terrific book. So yeah, those are my top 10. So when the founder says, hey, what are your top 10? And the answer is, here's the top 10. And, there's a lot on the shelf right now that I'm going through. That one of the things I'm doing with the book is I've got a list of resources at the end of every chapter where I reference the original source docs. For example, one of the books on that list has a predecessor book that's really similar that he never gave credit to. And I'm like, that kind of is frustrating, but I think that's one of the classic things of how do you take a content and make it more accessible to your audience? And hopefully we'll see, like when the editor is done with it, I think it's much better than it was, but we'll see. I mean, selling a business book is kind of weird, right? It's not a brilliant way to make a career.
Walk us through that experience of going from an idea, you actually kind of started with a bit of like a course and it's turned into a book. So how did you go through that process? And then even to the point where finding a publisher, yeah. Getting it published, and all that stuff.
Yeah, I think the unique content, a lot of stuff has been written obviously about startups. There's tons of books about startups. One of the things that probably by the time you and I met, when you went through the program that we originally met with, a founder asked me for a copy of my financial model. And Crunchbase, the CEO of Crunchbase was a friend. And I went back to him and said, hey, can you just pull a list for me of every like seed funded company over the last 18 months? So that ended up being a list of 2,654 companies. And I've now tracked those companies over the course of a 6-year longitudinal study, never planned on it. It was a simple, easy ask that turned into this weird quest, right? And because the thought was, hey, is there, yours was a market, or this person's was a marketplace, mine was a subscription. And those overlap a lot, but they're different, right? How you make money in a startup is very different. So we went through that list of 2,600 and basically came up with there's 14 revenue models for tech. That's it. Subscription, meet service, commerce, services, up to the more obscure ones. Like I had coins and tokens there for a bit. I took it off finally because ultimately it's not really a business model. So a business model and revenue model requires that you actually have metrics, right? In the case of coins and tokens, it's really an IPO, ICO, right? So ultimately I listed there as something I kind of tracked for a while, but frankly have killed. So you have 14 revenue models. That's how you make money. And you need to know what those economics are before you go into it. You also need to know if you can acquire customers at reasonable economics to get, there's 3 parts of a business model. There's the value you create. Think of it as a Venn diagram. So the very top circle is value creation. So it's your product or your service. The second piece of the Venn is there on the bottom left is the value that you capture, which is the gross margin and corresponding net margin. And they range from, okay, for a services business, 35 to 50% gross margin and a net margin of break even or better, to software, 85%, right? Or a metered service like Amazon Web Services, 90% or plus. Yeah. And high net margins. So in venture land, we say those are pattern matching things, which really just means you have a super sticky product, you've got a big ass market, right? You've got a great team and you're getting great margins. So the third piece of the Venn is how you deliver value, which is the complex one, which is what's my marketing, what's my sales, what's my pricing, and what's my monetization strategy, which is your revenue model. So when you put those 4 pieces together, there's a lot of complexity there. So yeah, the unique content of the book really breaks down those pieces and says, hey, just pick one, pick a primary and a secondary revenue model, right? Here's a marketing strategy and separating out for people the difference between a marketing and sales strategy and a sales strategy and a biz dev strategy. And based on, is your product known or unknown? So there's things if you have experience with it, you're like, if I could afford to hire a VP of marketing, they would know this is what you need to do, but I can't afford to hire one. I have to be a generalist. So I have to kind of bootstrap my way through that and figure it out. So the unique content of the book is really that, is how do startups make money? What are the, what are conversion metrics and what are those heuristics? So now with that framework, I can look at it and say, does my idea fit one of these 14? Which one? How do I make money? And when I balance those 3 Venn diagrams, is one of them super tiny and one of them super big? Like my cost to make this product is super high, but my margins are super low. Great, good to know, like early. Should you do it or not? It's a great question. And again, it's back to giving the tools to the founders that allows you to really have the question of like, does this make sense or not? Should I proceed or not? Because that's the way we as investors are going to look at it, right? So I've been on all the sides of the table, board member, investor, founder, COO, right? And when you look at it from the investor's perspective, because you're the first investor, and as the first investor, you've got to make a decision the same way the later stage investors are going to make. Like, can I make money with this, right? Right. And I don't know if you remember Juicero. Remember the juicer? Yeah. So it's a brilliant story of why Silicon Valley is whack, right? So for those of you who don't know the Juicero story, they basically built a machine that sat next to your coffee maker, and they'd send you a subscription for juice pieces, and then the machine would squeeze the juice parts and make it into juice for you. So they burnt 124 million before they failed, when people could just squeeze the thing with their hands, right? And the answer was, yeah, no, that's you can make it, but the bigger question for you as a founder is, should you make it, right? And then there was another one called Belty, which was an internet connected belt. So if you and I were out to dinner and I had too much, I can like use my phone app and loosen my belt. Again, great example of something you can make, but you shouldn't make it. No. And obviously there's lesser degree examples of that, but I think as a founder, you want to look at it and say, this is this is something I want to think about as a founder. Should I do it? Is it worth my time? Because most of you are going to work on this idea for 7 or 8 years, from the time you quit your day job to get angel funding, to get venture funding, to get to an exit. And right now, I think kind of about the exit first and work my way backwards and go, yeah, this one's not a good use of my time.
Oh, nice. Reminder, if you have a question out there and you're wondering something specific or just general about startups and what Dave's seeing, feel free to either just kind of raise your hand in the comments, post it in the comments, or, we can even pull you in and you can ask yourself. So, okay. So, even going back to just, specific advice, is it actually a good time to start a company? Is it now a better time than general? Is it a worse time? So someone that's really thinking about taking that leap, talk to us about what you see is it a good time or is it not a good time to start a company?
Yeah, I think so first off, you need to make a personal assessment about, do I have the personal runway to do this relative to my risk factors? I think that one of the things, what's most interesting about this time to me, Nick, is that, I look at the small severances that most people get when they get laid off of a job and somebody has to go create their own revenue. So the difference, by the way, between a product company and a services company is, if you're a services company, you're doing accounting, you're doing commercial landscaping, right? You're in business services. You don't need to worry about product market fit. Other people have product market fit. And the question is, can you sell against them in your geography in most cases? If you're doing a product company, you have to worry about product market fit. Am I building something people will pay for or not? And then you're in a sprint to get from your idea to product market fit, and then from product market fit to scale, right? So, but if you're in services and you're like, I have to go create my own income, right? So I did consulting for years and still do on occasion. And so that's a services business. There's no question about product market fit. The question is my knowledge and is my price relative, a strength and value to the people who are going to buy my services? So you don't have to worry about product market fit. You can go do it, but you have to go sell, right? And you have to go sell now without getting on an airplane, which is probably a great significant cost savings. Now, if you have a product idea, you may look at it first and say, we need to focus on services first because it's the fastest path to revenue. Right. And if I'm building a product that nobody's seen before, that's obviously an uncertain marketing spend. So you're going to have to build a budget for, like, how do I do this and where do I go do it? I was on a panel once with a VC who was like, every downturn, founders look at it and go, it's a great time to start a company. And I'm like, that's just bullshit, right? I mean, we are compelled as founders to go pursue these ideas we have, and we can't not do it. Like, I don't know if you've ever met, but for most of us as founders, my view, Nick, is like, most of you on the call are like, I am compelled by this idea. It may not even be rational, but I am compelled by it, right? I can't not think about it. So that doesn't always, as part of what I love about working with founders is we're just this shy of delusional.
Oh yeah.
I'll get in a room with 100 founders like you, and I know that, the math says 70% of you are going to fail. And all of them know that math doesn't apply to them. It just applies to you poor people on the call, right?
It's crazy because I fully agree. We're this shy, if not across the line of crazy, but it's a good crazy. And I think so. We hear a lot of like, you've probably heard this where it's like, well, Twitter and Facebook they use the like survivor bias to then say, well, it's a great time to start a company in this downturn because this and this company that's multi-billion-dollar started in a downturn. So yeah, I mean, do you think it's more like, in a weird way, it kind of all is a wash, and it just depends on if that individual has the right approach, the right understanding of the market and the problem, and then the ingenuity to create a good solution, regardless of downturn or, really hot times?
Yeah, for sure. I mean, so I think if you look at Bill Gross's video, it's the best 7 minutes on the internet about startups, right? And he talks about the factors that made companies in their portfolio successful. And the number one factor was timing. The problem is you don't know if it's a good time until after you look back on it. And most of us have, to your point on survivorship bias, or I would call it, if you're a venture capitalist, revisionist history, right? Oh, we made such a great decision investing in that company at that time. And the answer is, well, you know that because of survivorship bias. You don't know it at the time, right? So we generally look at timing relative to headwinds and tailwinds. So I think there are great businesses to start right now. And I think there's really tough businesses to start right now. But the tough businesses were tough before, right? So in many cases, right, you had people who had already raised money in the space. You know, if $100 million has been raised in your market category for the product you're building, the oxygen's been sucked out of the room. That's bad timing, right? That's a headwind, not a tailwind. So I think there are still great opportunities, again, perpetually optimistic, right? And I think there are ones that will be particularly difficult. Like we're working on a sell side deal right now on a company who's 4 months ago, if they were out explaining to customers what they did, it was very niche, right? People do that? And everybody today is like, oh my God, that's such a great idea. And they're just crushing it, right? I'm on the board of an email delivery company that does time-based email optimization. So my marketing spend, they can look at how many people opened, what percentage of people on my 2 million people list opened more emails. So they're crushing it right now, right? So they've seen more growth than ever because people are looking for status quo is no longer okay. I need better tools, and they're crushing it. So again, I think it's very bipolar. But if you were selling to the SMB market space, oh my God, horrible timing. You know, we had a project for the family office. We were doing a vertical brewing system. Think of it like a Peloton screen in the front of a big brewery system that would brew 750 pints a week. Well, we've idled that because it was focused on venues and restaurants. Well, that market's dead. Do we keep spending on it? No. Will it be a good idea later? Probably. Will that feeling have passed? Maybe. Right. So I think you just have to look at it and go, maybe now's a good time. Maybe now's not a good time. But being objective as a founder is hard, right? Especially if you only have one idea you're holding on to.
Yeah. So talk to us about, man, it just a lot. It went out of my brain. Anyone that has questions, we don't have a ton of time left, so I do want to get to your questions. Please, like even at this point, you know, unmute yourself and just say, "Hey, Nick," or "Hey, Dave," if you want to interact here. But I think it's you know, taking away from this conversation, it is a promising time. Okay, I got the question back. It is such a crazy time, and things have changed. So what, in your perspective, two things. Number one, what do we go back to? What's the thing, what major thing do we go back to? And then what major thing is like, oh, it's changed. Like the world has changed. So do we go back to normal in what direction? And then what is totally just a new world and now it's an inflection point in our history?
Yeah, I think when I look at it I'll take the second one first, is I think what's changed is digital transformation has accelerated at a pace that is unprecedented. So I delivered a 4-day boot camp for a program in Bahrain from 11 p.m. Seattle time to 6 a.m. Seattle time for 4 nights, because getting on a plane right now is stupid. Now, will I ever get on a plane again for that one? That's kind of crazy. Like, because part of the reason I do the programs in the Middle East that I do, there's not lots to see in Bahrain, but Beirut was really cool and Casablanca was coming up. And I'm like, it's kind of a wanderlust for travel. Mm-hmm. How soon am I going to travel that way again? That's a great question. So I think digital transformation as it relates to corporate, as it relates to opportunities to work from home, you know, with Facebook saying 50% of their workforce may work from home forever, right? There's a whole set of things there. Now, Microsoft said the other way. So I think the idea of this is an accelerant, and I think where you look for opportunities where it's creating an accelerant, those are great tailwinds for you. I think the what's changed from a founder and idea perspective is interesting, is I think founders have had more chance, because we've been at home for 2-3 months, depending on where you are. We've had a chance to be much more reflective than we've been historically, where we've been more reactive, I would say, in general. So I got laid off from my job. I know this particular market. I'm going to go create a new services company around that market. Where the last 3 months I've been working from home, I've been much more reflective. So I think that in some ways is hopefully something that doesn't change, right? Am I more introspective? I think hopefully that continues. what's changed and what's the new normal is kind of the frightening one, right? I think that's where there's tons of opportunities, as long as you're not on Main Street. If you're on Main Street, I think that's, we just have such a long recovery there that we haven't seen, the separation between the haves and the have-nots relative to every major first world economy is going to be really hard. That's going to create more animosity. I don't think it'll be civil unrest necessarily, but in some markets it will, right? Because if you look at Beirut today, or in Lebanon when I was there, that civil unrest was the fact that there was such a big gap between the haves and the have-nots. They didn't have a big COVID thing because basically the country was locked down from October because of the civil unrest. So consequently, COVID's not an issue, but 25% of their GDP was remittances. So money coming in from, me to you as my brother who's in Beirut. And when 25% of your GDP disappears, that's whacked, right? That's creates some unique challenges. So, I'm less certain about those ones. I kind of look for where the opportunities lie, and I definitely, over-index on those things. But I can't imagine that business travel is going to be the same. It just doesn't seem like that's something that, even if you feel comfortable with it, it feels like your family's going to be like, do you really?
Well, and think about the waterfall there. I first think about the airlines and the vast amount of planes that they just have too much inventory now, right? So that's number one. Number two, do they restrict, even the middle seat, or what changes in flight? Okay. And then if you look at business travel, was probably a third, if not more, of daily flights, maybe more, arguably, maybe it's half. So if that changes, then everything down from I don't know if you heard this, but amazingly, commerce in airports was skyrocketing, and there was a ton of, it's it's an environment that everyone is isolated in, and people go buy stuff, and so how does that affect commerce in airports and then into the cities? And then that's a layer of percentage of restaurants, bars, all that stuff, service. If you think about a major change in business travel because of digital transformation, just that cascades into major stuff around the world. Yeah.
Well, I'm glad my two oldest sons are not in the services sector, right? As my youngest son off to college to be a musician, right? That's musicians don't have gigs these days, right? They're doing online and for free, and hopefully they get paid. And right, it's just a hard gig. So there's a bunch of career choices around that where you're like, yeah, I don't know if I do that or not. But the nice thing about being 18 and not to be a freshman in college is the world's your oyster, and that's all kinds of opportunities exist. But yeah, I don't think Seattle hotels will recover into sometime into 2022, right? So but I'm probably a little bit like you in that I tend to read the the opportunity news more than I read the negative news, just because otherwise it would be too discouraging. I think in some ways I look at it like my limited partner would look at it. It's like, we're in 1929 and we're going to have to wait 4 years for this to come out. I don't think it's going to be 4 years. I think the fast return of the market relative to tech sector in particular is particularly interesting, but I don't know that we've seen the bottom. I'm clearly not a stock advisor, nor do I give legal advice. So I'm observing what's happened in the past. So,
well, and if you think about it, look, the way I view it is, this is not so stark, but it's look, attention's getting pushed around. So, people still have 24 hours. They still have things that they want to do. The market is just opening up for new and different, cheaper, safer experiences. So it's your and our opportunity to create things of that nature that then people would pay for. I do want to get to a question around that. What do you think is happening and will happen in the accelerator industry?
Yeah, so there's a group called Global Accelerator Network, GAN, so GAN.co out of Denver that I've worked with a bunch of. I'm one of their lead trainers for programs around the world. That's kind of how I got referred to Middle East and other. The programs that have capital, I think are going to continue to do, and then we'll continue to do well, and we'll pivot into what the opportunities are relative to who they pick to go into the accelerator. And that's what we saw in Bahrain last month. That's what we'll see so I'm doing another program in Cairo, probably online in July. I can't imagine I'll be traveling in July yet. So they have, in the Middle East, so if you look at the rest of the world as well, they still have 300 companies that apply to get into the boot camp of 30 companies where they select 8 to 10 companies to get in. Right. So that the global opportunity for accelerators, I think, just continues to grow. Where I think, Techstars and YC and 500 here have seen much more competition. So we don't see the quality that we used to see because there's so many more global programs. And I think GAN alone has over 100 programs. There's just slightly over 100 programs. So if you had capital committed from limited partners, the answer is you're still going to do that. If you are trying to raise a new fund or you're trying to raise a new accelerator fund, I think the fundraising is right now hard because people want to keep liquidity with uncertainty. They want more cash available. So I'm seeing a couple of early stage funds get started. They have early commits, super impressive. But I think the accelerators that are established and were good are just going to pivot who they take into the programs. So that's wouldn't be a big surprise with that. We're seeing the new Alexa fund or the new Alexa accelerator here in Seattle by Techstars. They're just onboarded me as a mentor again. I think this will be year 10 for me with Techstars. So, it's in that sense, it's a super exciting time unless you're trying out to go find money, in which case you really have to be let's put it this way, the closer you are to having real data about your growth that's moving up and to the right. So I have predictable, forecastable revenue. So the closer I get to an A round of funding, the more data I need to have to calculate my valuation. If I'm doing seed round of funding, it's a question of, is it a big ass market? So think of it as a three-legged stool, right? I need a great team. I need a big market, but it starts with market, by the way, because even a great team in a bad market will get a mediocre result at best. So if I have a big market, a great team, and an interesting product that's super sticky and has some traction, the answer is you'll get into an accelerator program and you'll get funded. The question is how much funding will you get, right? I think 3 months ago, the answer was you could probably over fundraise relative to what your need is, where now valuations are going to be tapped back at least for the next few years. So you have to get, the closer you can get to that predictable, forecastable revenue, the less of your company you have to sell and the more of your company you get to keep for yourself. You just have to prioritize how you spend your time and your cash and your resources relative to that.
Very good. Very good. We just have a few more minutes. I definitely want to, have anyone else that wants to jump in and ask a question, feel free. But just given the time, I want to thank you all for being here. We can stick around for a few more minutes. But if you need to jump onto your next Zoom call, that's fine. And feel free to do that. But we want to thank Dave Parker. Where can we find you and more information and maybe even, about the programs and even the book when it comes out?
Yeah, so gettrajectory.com is the website. So just www.gettrajectory.com. You can find the meetup information. We start again July 1st. So it'll be the first Wednesday in July. And we're doing 2 sessions. We're doing a 9 a.m. Pacific time, so that fits with GMT and noon Eastern, and 6 p.m. Pacific. So really focused on the Seattle because the brand has kind of gone past just Seattle and just the Northwest. So it's two different time zones or 2 different sessions on the first Wednesday of every month. And the sessions are $35. And basically you're queuing up to do 6 months in where you'll do final pitches. But the idea is to get you ready so that you have a venture ready deck. Is something you can present at that end thing with the data to back it up. So if you think about the one that I'm doing in Bahrain, it's really we're normalizing all of the team's decks over 4 days. So you're like, oh, we need to figure out your TAM. So we actually break down how do you go figure that out? Where do you look for that data? How do you represent it? So that they know when they're pitching for the final interest into the accelerator. If somebody says, well, how did you get that number? And they're like, well, we kind of swagged at it. And they're like, well, where were you day 2, session 1? Because that's what Dave talked about. So it's been quite an interesting process for sure. But they get more information there on meetup.com. But love to have you if you want to sit in. And you can sit in for 1 session or all the 6 sections. It really, you have to decide as a founder on a monthly basis around your go, no-go decision or not.
Yeah. Well, thank you, Dave. It's just been nice to chat. It's always a pleasure. We go way back. And, I always leave these conversations with a healthy dose of reality and optimism. So I appreciate it.
Yeah, you're welcome. Thanks everybody for attending, and feel free to reach out. I'm pretty easy to find on social, and you can find me on the website there. And but yeah, happy to be helpful whoever I can, and excited to see what ideas come up out of this.
Hey, Dave.
Awesome.
Nick, Darian, sorry, Nick, if you have a last thing, go ahead. Otherwise, I was just going to say, Dave, Nick, good to see you. And also, Dave, could you maybe talk just briefly on why you're working in the Middle East, as far as whether it's you see opportunity there, something you got roped into, or a socially positive thing? I think it's
a little bit of all of those. So for me, Darian, I love to travel. I've had a chance to do business in Japan and China and now the Middle East and South America. And having grown up in a small town, and the wanderlust of travel is always fun to me. So when somebody said, "Hey, would you come to Cairo and do a program?" the answer was, "That's super interesting." And I took my then 17-year-old, who's now 18 and going to college. So it blew his mind, right? Because I think the more you travel, the more you look at the world, the smaller the world becomes. I think it's a great opportunity. 50% of the businesses in the Middle East are what I would call copycat businesses. But I think that's actually super interesting because a company like Rover doesn't have a competitor in the Middle East, but they have a playbook and they've raised $130 million. So if you wanted to create a copycat company like Rover, at some point Rover is going to come to the Middle East and they're going to make a build or buy decision. So
Right.
If you're a startup founder in the Middle East, doing a copycat makes tons of sense. And there also is cultural dynamics on go-to-market, right? So it's kind of like humor, right? You listen to a laugh track on Friends, and a friend who's not from this culture kind of laughs along because it's socially acceptable, but they don't know the joke. And marketing is like that. Like marketing is very cultural. So it's also a great chance to build bridges. At the end of the day, I mentioned it, I love showing up to a group of founders. I know we're all slightly delusional. Whether we look the same or talk the same language, we're all the same. And I get to see my tribe in Sao Paulo, Brazil, or in Beirut, or in Cairo. Because even though we look different, dress different, speak different languages, we're all the same. So the more chances we have to build bridges with those folks, the more exciting it is for me. And that's why I continue to do it. So working with founders doesn't pay particularly well, right? Because none of us as founders, first-time founders, didn't have any money.
Yep.
So,
well, makes sense. And, thank you both. Hope you're staying well.
Thanks.
Yeah. Good to hear from you. All right, everyone. I actually have to get going to my next call as well. So, yep. Thank you all, and see you next time.